How's it going out there? It's March 16th. I'm Frank Curzio of the Wall Street Unplugged podcast, where I break down the headlines and, you know the rest. Tell you what's really moving these markets. So, today's the day I bring in my buddy, the awesomeness, perfect person in the world. Always like building you up. Daniel Creech, senior research analyst, where we break down the markets. Lot going on. A lot going on today, especially, right? Not just the Fed, but China stocks are moving. You're seeing, Russia stocks move. What are we going to do here? Going to break down all the topics. A lot of great news. Daniel, what's going on, man? How's everything?
Happy Wednesday. Hello, everybody. It's another great day on Amelia Island. Although it's raining today, but...
Yeah, raining the past couple of days.
No, it's good. Yeah, we've had a couple busy weeks. We can start anywhere today. It's a good one.
Yeah, I know. Just remember, when you're doing this and you have your own podcast, the person, like I'm building you up, giving you that confidence and stuff. Just remember that. Okay, you got to pass that on. Whether you're lying or not, you got to pass that on.
Whether you're lying or not, we go from foreshadowing to the reality of it. All right.
Here's Daniel Creech. He's not that good of an analyst, but I have no one else to fill in today, and here he is. How you doing, buddy?
Wonderful.
But that's not the case, and Dan's awesome. So, Dan, so let's talk about the big news, which is the Fed, right? They're expected to raise rates. They said they're going to raise rates by 25 basis points when they testified in Congress last week. But, we kind of all know that. I don't think there's going to be a change to that, even though I think they should be raising a lot faster. But the question is, are they going to be dovish or hawkish, which I think is funny. I'll tell you why in a minute. And dovish, by the way, guys, is saying that, the Fed's not going to aggressively raise rates, and there's lots of concerns with Russia, and we're going to take our time, or tightening is like, hey, we're going to aggressively raise rates, which they said in November. Holy shit, we're behind the curve. It's not transitory and all that. So that's what we're going to find out with the markets later today. So when you listen to this, everything we say, we could look great or like idiots, but I like actually, throwing it out there and tell you our opinions before stuff happens, right? This way we could, talk tomorrow about it or whatever. And a lot of people like to talk about afterwards, and I knew the Fed was going to do this or whatever, but let's see. Let's try to predict what the Fed's going to do, which you're going to know when you're listening to this, because we're taping this in the afternoon. They're going to come on probably like a couple of hours or so and let you know. Daniel, what do you think here? What do you expect from the Fed?
Yeah, 2:00 p.m. Eastern time, and then 2:30 is Chairman Powell's Q&A and or update or whatever. I think I'm going to give you two answers. I think what they should do is, and we like to talk about these and throw stuff out. A couple weeks ago, we were thinking that it was leaning towards a 50 basis point. And then he comes out and basically says during testimony that they're going to do 25 today. So anything outside of that would be a real shocker. I don't think he's going to do that. So I think the 25 is in there. I think they should announce that since he's trying to foreshadow and land this giant economy in a soft landing for their silliness, they should hint at a 50 basis points, 0.50 rate hike in the next meeting, which is it April, Frank? I think it's April and then June or July.
It's April and June, yeah. Yep.
I think that's what they should do. I don't think they're going to do that. I think oil the price of oil skyrocketing and now coming down, I think has given them a lot of leeway. And just so everybody knows, we don't need to get into this right now, but I come from a perspective of these people in the room, the smartest people in the room, I don't think their intent is to fix it. I think their intent is to kick the can down the road. So my point is that taming inflation is a lot better than curing inflation from a policy standpoint, in my humble opinion. So I think they should signal a 50 basis point raise highs the next meeting. I don't think that they're going to do that because of the price of oil and the volatility there gives them some leeway to just kind of continue on down the road.
I think the Fed's a complete joke.
Well, I
really
with that.
do.
Hell, that's easy.
I think this is hilarious. I think that's this conversation that I'm seeing, even with the people on CNBC. And they have great analysts on there. A lot of people that I interviewed on this podcast, and even through Fox Business. I try to watch all the media channels. I don't care what political party you're from or whatever, because I want to see what the consensus is out there. The Fed, what the Fed says and what they do are two different things. And over the past 10 years, they kept rates low forever, right? Forever when they didn't need to, right? Now you're really seeing it, what's happening when you keep rates low and you're buying bonds and and you're injecting trillions into the market. What happens with massive inflation, supply chain concerns, all this crap, right? You could throw COVID in there, but that's, again, whatever it is. But the Fed always had the ability to say, hey, this is what we're going to do. Okay, we may tighten if we go above 2%. Remember that story? If we go above 2% of the CPI, that's when we'll look at tight. By the way, with 7%, right? 7% and rising, continue the rising, right? So that whole transitory, and that transitory talk came out over a year ago. Go look at it. Over a year ago. Okay, we're talking January, February last year, transitory, right? So And then through the years, this is what we're going to do. We're still going to buy bonds for now. Like you use the term, kick the can down the road. That you can get away with that. The Fed is in a corner right now. It doesn't matter. It does matter what they say in terms of trading. So if he comes out and says, hey, we're not going to really raise rates that aggressively, inflation is going to 10%. So inflation is here. The only way you can control it is by taking money out of the system, which you have to raise rates and you have to stop buying bonds. They said in November they're going to do this. As of right now, by the time you're listening to this, it's not going to be the case. As of right now, the Fed hasn't done shit. They haven't done nothing. They've done nothing at all, right? So now everyone's like, oh, well, they're only going to raise by 25 basis points, and the Fed's going to be dovish and say, we're not going to. They don't have a choice. They should be raising by a half a point now, a half a point, and a half a point again. That's how far behind the curve they are. They're risking inflation being here for many, many years. And it might be a good reaction to the market because you see in the last 2 days, we went up, and I don't want to sound bearish. You have to take money out of the system. And hope is not a strategy. They were hoping that inflation came down. We're not going to see inflation come down when we have supply chain concerns. We have them all across the board. We're going to get to China in a minute, who closed, locked down again, starting to reopen some of the plants a little bit due to COVID. That's going to create even more supply chain concerns. The supply chain and the delays are going higher right now. It's taking longer. You think it's supposed to be getting better. It's not. It's taking longer still. Inflation it's trending upward. It's not moderating. It's trending upward still. And we don't even have the latest energy prices priced in. So the fact that when people go on TV and said, oh, the Fed doesn't have to do this. So they have to. They didn't have to do a lot of shit for the last 10 years, Daniel. They didn't have to do anything. You just keep rates low. Hey, everyone's happy. Money flood into the market. Stocks near all-time highs, hitting highs. Wealth is going higher. People are going to vote with their wallets, and everybody's happy. Those days are freaking over. Now you have massive inflation. You don't have a choice. The fact that they're like, oh, they're going to be dumb. You could be as dovish as they want. They could say, we're not going to raising 25 basis points, and we're not going to raise rates ever again. You know what? Or for the next year. The market is going to go up probably for the next couple of weeks, and then when inflation goes to 10, 12%, you think things are bad now. Wait. Yeah. You have to control inflation. It's a train that as soon as it starts going down that hill, you can't stop it. It's so difficult to stop. And right now, they even haven't attempted to stop it. And for you to come out and say 25 base, you're at zero. 25 basis point hike, and people think they're going to be dovish. Yes, they're going to be dovish, and it's going to be good for the markets. You have to raise rates. Inflation's not going away. Supply chain concerns, oil, Russia, we're seeing it across the board. I just think it's hilarious how people are saying, and on TV, oh, the Fed, they have to raise. They have no choice. It's not a question. It's not like, hey, what do you think the Fed's going to, they have to raise right away. As we know, they tried to get away with this and not raise aggressively, thinking inflation was going to moderate and be transitory, and they were dead wrong. That, I won't curse, F them. And now you look at them in the back. I'm interested to see this meeting because he's going to be all over the place. And he can't be all over the place. He's got to say we're going to be raising rates. I mean, he could say whatever he wants to calm the markets, but the fact is you're going to have to raise rates to control inflation. And I don't know, saying things, again, they got away with saying a lot of stuff. Now you have to do, and let's see what they do. So it's 25 basis points. They're probably going to be dovish, probably going to be good for the market. I think that's very, very dangerous if you're looking to hold stocks over the next 6 months, 12 months, long term, because you're going to see incredible volatility and inflation continues to run out of control. That's my 2 cents.
They're definitely in a tough situation. And again, I just think they should signal higher rates. They can always back off of that. It's going to look even worse. And it's even hilarious because they start throwing out words and you get some non-voting members of the Fed that are interviewed on TV and things. And they talk about, well, we don't want to lose our credibility. I mean, how the hell can you say that with a straight face anyway, that's entertaining. Interesting times to be alive. There's going to be a lot of volatility. But yeah, that's our take on the Fed. And hey, Fed Chair Powell is probably taking a hint at how to talk to markets because China got a little boost from their government just saying that they're going to support the listings overseas, like the over-the-counter stocks, the ADRs, et cetera, that you can buy. Because a lot of people don't know this, Frank, but when you buy the Alibabas of the world or whatever over the counter and things, you don't actually own anything. It's just a claim to that. Anyway, China came out with positive statements. This shows you the power of policy and why you should pay attention to this, Frank. Because Alibaba, I don't know if you have anything on your screen, but JD.com, Alibaba, Didi, 20% in a day. Now, granted, they have gotten absolutely smacked.
90%, yeah.
Yeah. But anyway, that just shows you what policy does, what policy forward-looking or hints at can drive markets. And that's what we want to try to participate in.
No, absolutely, absolutely. And just like you said, the policy, I want you to remember, I'm going to come back to that later, but you're seeing a market right now where what? Oil's pushing down. Now I feel a little smart because I said you should short oil. I think, not short oil, but I think oil was a good short at 100. Went to 130 immediately and slapped me in the face. I didn't short it. I just said I think it's overdone. Went to 130. Now it's below 100 and trending lower. Commodities are pulling back. Again, good thing. And again, the talks in Russia, I think, are kind of hilarious. I mean, use your common sense, right? I mean, Putin's not going to surround the capital and not take it over. They're not going to surround the capital and be like, oh, okay, all right, peace, let's get out of there. No. So, they're going to say that all is peace and, ceasefire, whatever, it looks like these tensions are easing. They're going to take over Ukraine. It's just a matter of what's the uncertainty after that. How far is he going to go? I mean, is that going to lead to, China, Taiwan? Is that going to lead to him, going further and trying to partner with China and create, massive soup? That's, the concerns going forward. But the Ukraine thing and the back and forth where the ease of tensions, look, they're going to take them over. There's nothing you can do about it, right? I mean, all the countries are saying it, talking a big game. They'll provide weapons. They'll do whatever they want and, say and advise them, but they won't fight for them, right? So, and Russia knows that. Russia has the playbook. And those people who are saying Russia's crazy, Putin's crazy, I think is absolutely joke. I mean, the fact that he's able to take them over and he knows that no one can do anything about it. Believe me, the guy is sane. He's crazy, but he's sane. He knows what he's doing. He's very, very smart. I'm not, saying it where I'm like, wow, I'm not being a fan of Putin, but for people to go on and say, oh, there's something wrong, he's crazy or he's lost his mind. No, he didn't lose his mind. He's doing exactly what he wants to. He wants to take over Ukraine. He's doing it. He knows no one can do anything. He knew the sanctions were coming because that's what we do every single time that this guy gets aggressive. He knew that his currency was going to fall by 30, 50%. He knew there's going to be defaults on the table, which brings the question, is Russia investable? Because a lot of people are saying China wasn't investable. And now you're seeing a lot of these stocks roar back. Is it a trading opportunity? And obviously, when you see stocks moving 20% immediately, it's a lot of short covering. And those volume spikes. But what about China, Russia? I mean, you got some questions when, Russia is not investable or it is investable. I mean, talk about that because, it could be opportunities. People told me to buy Russia 10 years ago, 5 years ago, 3 years ago. Thank God I didn't listen to them. Very, very smart people. I just, again, they'll say the PE ratio is low, which is the biggest negative ever. If you're buying a stock, don't buy a stock because the PE is low. There has to be a growth factor. The only reason why I'm telling you that is because I got my ass kicked so many times doing that. So telling me Russia's cheap with no growth or catalyst never made sense for me. And now, but is now the time? I don't know. I mean, I want to look now, to be honest with you. What do you think?
Things can be true and remain true for a long time. You can have a low PE, and that's a good point, but it can have a low PE for a decade and not go anywhere. So, yeah, that's a good investing lesson. I think China is tradable on this. I'm hesitant because one comment or one day doesn't make a trend in a sense. Yet, Xi is going up. President Xi over there in China is soon or relatively soon is doing something with their branches and government to basically reign or continue to be in power for another 5 years, I read. Again, I take all that with a lot of salt. Anyway, it's just like our midterms. You don't do silly things when you're looking to gain public attraction and or support. The comments coming out of China and there's got to be some short squeezes. There's a lot of volatility there, but I do think that's a tradable environment. I would do that. On the Russia thing, last Wednesday, Frank, when I filled in for you because you were down in Miami hanging out and having fun in the sun while we were freezing up here, I posed some open-ended questions and I got some good feedback, and capitalism was winning through. And a couple of the feedback, Frank, that gave, because I just asked, hey, should you be allowed? Because we talked about, or I mentioned some ETFs, the ERUS and the RSX, just quit trading. So if you had money in that, it's just kind of locked up. Who knows what's going to happen with that, when markets are going to reopen, things like that. And from the capitalist standpoint, yes, because those value, we're in such a weird gray area because those assets, we have so many back and forth or things that don't make sense, Frank. Real quick. COVID, you got 30 to 50 some million people in China under lockdown. You had Foxconn quit some manufacturing. Now that's back on already. That took about a day. Mm-hmm. Oil's dropping because you got demand in China, people worried about lockdowns. You also got the positive comments out of the Russia-Ukraine peace talks and things. Yet you still can't even buy Russia. But none of that is disrupted. Those gas companies, Gazprom is still running gas. As of last week through the Wall Street Journal, it was still running gas through Ukraine like normal. Europe isn't cut off yet. Yeah, prices are higher, but nothing has changed there. So on paper, you have these assets that are worthless, and yet outsiders or anybody else can't. So I get that. You still can't really buy Russia. I think that's a where money goes to die right now, I just think that you're going to get labeled as a terrorist probably if you try to, and I'm not joking about that. And B, you really can't. And there's so much unknowns there. That's when political risk is just out of hand. So China, yes. Russia, no, only because it's not an option.
I mean, and with Russia, yeah.
What about you? Sorry, what should you be able to at least try? Like, one of the best feedbacks I got was, hey, I didn't start this war. These corrupt politicians did. I'm looking out for myself. I should be able to do whatever's best. I understand that argument. I'm not saying that's all there is to it, but I understand that perspective.
Yeah. I mean, are you saying from like the point of view that, you should feel like ethically?
Yeah, like should you have the option to buy the RSX or the ERUS? Even if it goes from 50 to 5, should you be able to buy it if you wanted to right now? Because you really, as of a couple of days ago, you couldn't because of the trade.
Here's a quick story, okay, when it comes to ethics. I get the point, okay, and you want to be ethical. At the end of the day, I think people listen to this podcast to make money. If we're going to be ethical, there's a lot of then you shouldn't be invested in Coca-Cola. You shouldn't be invested in Amazon. You should never be invested in Nike if you really want to be ethical. If you really want to be freaking ethical, right? I mean, come on, let's be honest. I mean, the shit that those companies do. I mean, Coca-Cola with China, the NBA supporting China. I mean, we know what's going on in China, right? I mean, if you're really, really, really ethical. So I want to, put this in perspective because my dad died of cancer and, he was a smoker. Smoker couldn't quit and, died of lung cancer. That should never, ever prevent me from recommending Philip Morris or a tobacco company based on ethics if I think my subscribers can make money of it. Is it personal? Yes. Ethical? Yes. I get it. It's like not investing. You shouldn't be invested in any of the vice stocks, which is, any of the gambling stocks, the marijuana stocks. But, you're in this to make money. I'm not saying make money by, screwing some guy that's going to be, completely broke and, can't afford to feed his family or anything. I'm not talking about that. But in terms of ethics, if Russia's a good opportunity and that institutions are going to run in once this war's over, which is going to push this market considerably higher, then you should be buying. I mean, it shouldn't be ethical. It should be based on fundamentals. It's very dangerous right now. They're about to default, which isn't a big deal. I mean, it's a great headline. We know that they're at that point, but it's being pushed like crazy, that headline, to show that, hey, look at the sanctions. They're working. Look what we're doing to Russia, So that's why we're like, holy shit, they're going to default. Again, when you control energy, you control the world. And they are the largest exporter of energy in the world. Largest exporter. Not largest producer. They're largest producer, largest exporter. And they have a lot of people that would love to buy their oil. And they have really great oil, refined oil, right? It's not like the shit in the tar sands in Canada. They have great oil there, right? So you have a lot of people that will buy it. So, it is an economy that if you want to buy it, I don't see the catalyst other than they're cheap right now. I would be very, very careful as an individual investor. I see institutions talking about it, but they're going to get in bonds. They're going to get in early. They're going to get in these things where they're going to get warrants. They're going to lower their costs considerably, where all you need is a bounce and they can execute those warrants. And then they're basically, once they get warrants, they're probably going to short the stock and make the money off the warrants of the difference. There's a million things they could do and talk their book. As an individual investor, hey, there's a lot of risk there. And, if you try to do it anytime up to this point, you got your ass kicked really, really, really bad. Really bad. And I know great investors who did this. And companies I know is in Russia. He's been oil. He's got amazing trades. And he even mentioned that on the podcast. And I'm throwing him on the bus because he's a great investor. But he's he's been in Russia and it's been going low, gotten crushed. But again, he's been calls on $100 oil when it was 40, 50 and amazing calls there. But as an individual investor, I would just be careful with Russia. There's just so many different ideas right now that are trading at significant discounts, good PEs with growth profiles that just stupid valuations here. And it's a bear market and everything goes down no matter what, but there's a lot of great names here that I thought they were great 10, 15% ago, and they're down even further. So I'd stay here if you really want to buy cheap stocks with high growth, with less risk. I think you have that opportunity here to make great gains at going into Russia. That's just my 2 cents.
Yeah.
Anyway.
It's not, there's a ton of, there's always risk and rewards everywhere. So not playing isn't always an option. That's what's good about Wall Street versus a casino. You don't ever have to play. You can sit here and wait. So
absolutely. So I want to move on.
Sit on your ass and think, as Charlie Munger said of Warren Buffett, or sit on his ass and reads a lot. Whatever.
Sometimes doing nothing is the greatest strategy in the world.
That's right.
And I've learned that many times. Instead of being in it or not being in it, being late or trying to buy early and crashing, just the more you know about something and the more patient you are, so what? You miss a 10% move. It's better to have all the information there. It's better to invest like maybe after a quarter than trying to predict, which is a coin flip after, again, it's a 3-month period. Who knows? Maybe, there's accounting practices that are legal, that all these companies can manipulate earnings and get massive contracts in one quarter and spread out through a year and whatever to make the quarters and just make these quarters time and time again. But you never know what happens within a quarter. It could be horrible and delayed orders, which is going to crush the stock, and you could keep your guidance for the year because those orders are coming in and people don't care. So you don't know what's going to happen at 3-month period. I'd rather know, like, after they report earnings, giving me that guidance and getting in, and I don't, so what if I miss 5-7% and I move higher? Or the stock could go lower and they may say something that, you might be like, holy shit, I don't want to buy this because my thesis just from what they said on the conference call is not intact now. So anyway, I want to get over to crypto. Crypto is pushing 40,000 again. And it's amazing because everything that you're seeing, a lot of the things that went high, I thought Bitcoin held its own and it did go lower, but then it held its own. A lot of it had to do with the Biden executive order, where after Biden came out and said, they're basically going to regulate cryptos, it pushed crypto up 8% that day. The next day it fell sharply. So I'm going to ask you this. Biden's executive order, is it a game changer or not?
No.
Okay.
It is a necessity. I get it. And we were having fun with this. I don't want to put words in your mouth. I think it's a good, you referenced the checkbox, and I'll let you explain to make sure I'm not taking that out of context. I understand the whole, hey, big money needs certain things in line to be able to play and or expand. Therefore, this is just kind of one of those on the, hey, we're doing this the right way. We're in line with all regulations and such. So now, basically we got to get through this gateway, and now we can get into this park and go play and run and make money. I totally agree with you there. The frustration I have, and the reason I don't think it's a big deal, is because this is just typical government BS of a lot of words and next to nothing. So, for instance, I have the fact sheet from the White House, and a couple of the last points are support technological advances and ensure responsible development and use of digital assets. Now, Frank, this is done by directing the U.S. government to take concrete steps to study and support technological advances in the responsible development, design, implementation of digital asset systems while prioritizing privacy, security, combating illicit exploitation, and reducing negative climate impacts. I just said a whole lot of nothing, Frank. I didn't make any sense. You need to stop me when I'm doing this. That's word for word. Mm-hmm. That's nothing. Mm-hmm. What the hell does that say? Zero. That's my problem. This is just part of the plan where governments get in the way, and hey, we're looking out for you. We're looking out for the little guy because you're too damn dumb. Bitcoin has gone from 0 to 40,000. All luck. You guys don't know what you're doing. Innovation can't continue. We have to step in. And then they're exploring this central bank digital currency, which I don't even want to rant about that right now. That's the worst idea of crypto ever. It's not crypto at all. It's just using technology behind it. But yeah, it's a good step from the checkbox. I'll let you elaborate on that. But outside of any meat in it, no. It's just window dressing right now, in my opinion. So the reason why the government is coming in now is because all the institutions are going to the government and saying, what's the deal? If they didn't care, the government would be like, whatever, because that's where the big money is. That's where the donations are. That's where the lobbying dollars are, right? So the fact that they want to come in this market is big. So what Biden announced is that, just set of orders instructs agencies, all the agencies, the regulation agencies, to develop policies that protect consumers, investors, businesses, right? So to guard against systemic risk, also to root out illegal activity, and create U.S. competitiveness on a global stage, giving America a competitive edge, over other countries when it comes to crypto development, because they realize that all the innovation is coming out. So here's my thinking on this. Okay, we talked about with the Fed, what they say and what they do is two different things. Okay, and we know that the government talks a lot of trash, but there was nothing on the table, Daniel. There was nothing on the table. And knowing people in this industry and a lot of big players in this industry, I know that we're trying to work with the SEC. They're doing the right thing in crypto because there's a lot of shit going on that's not the right thing in crypto that you want to get out of. If we're going to really go all in this industry, you have to get out of that crap. Now, as an individual, if you lose your money, it's not a big deal. If you're an institution managing money, and I want to explain how much money we're talking about. So when we look at the amount of institutional money, assets unmanaged globally, including real estate, is $250 trillion. Okay, that's the amount of money. These guys have a fiduciary responsibility to not get into something because something goes bankrupt, all of them lose their job, they can get sued, they get crushed. They need some kind of framework. They need the government to come out and say this, just like the Fed came out and said 4 months ago that we're going to tighten and we are going to taper, stop buying bonds. 4 months ago. What happened to them? Did they do that yet?
No. They're going to do it today when you listen to this again. They didn't do anything. But what happened to the market? The market crashed just from what they said. So what you say and what you do, again, are two different things. And I'm with you with the government when you want them as far away as business as possible. We could see it in almost anything that they do. I bring up the post office example all the time. I could bring up, Axon, which is Taser, which is a great example. The reason why that stock is so high is because of their cloud capabilities, because they have the cameras. It's not the Taser, it's the cameras. So they own 92% of all the police stations, right? So that's their penetration, 92%, and they charge them on cloud services, which is a massive business. So they're a software company, really, but they're charging the government 14x higher than the average cloud person. Think about that. Why are they able to? Because the government doesn't give a shit, because it's not it's taxpayers' money. They're not like, why the hell are you charging me 14x? You should be charging me 2x maybe. This is a government. You should be doing everything you can. No, I'm going to charge you whatever the hell I want to, because they're not going to say anything, right? Just like the post office. How is the post office losing money with so many people having so much money? I mean, look at Amazon, especially during COVID. Holy cow, I have like 20 boxes at my door every time I freaking get home. How is the post office not generating tens of billions of dollars a year? It's because they're going to just pay whoever. They're going to just run. They don't care. There's no checks and balances. So I get it. Here's the big deal and why this is a massive, massive game changer. And I understand why Bitcoin was created. I understand no government, decentralization. I get it. But you need rules in place. And from the people out here in this industry, Daniel, that have went to the SEC didn't want to talk to them. And they talked to them to say, hey, is it okay if we, because the SEC didn't know. Now that you have this on paper, yes, nothing has happened yet, but it does check the box off, which we were talking about, where now you have this money. Now this money, a lot of this money could flow in, because now if they're like, well, you lost it. Well, hey, the government said that they're going to come in with regulation. They're going to regulate this industry. Now they can build the infrastructure in order to support custody and so support this. Now, why is that a big deal? Because I'm split on both sides when I hear the diehards in crypto saying, how could you think this is good news? This is bad news. And these are people who all own Bitcoin who want to hold it forever. Because I'm going to be honest with you. And these are people that educated me tremendously. So I'm going to try to educate you on this. And I'm not being arrogant when I say this. If you're looking at 250 trillion in global assets under management, right? So if you're looking at Bitcoin and you want it right now at 40,000 and you're holding forever, it's going to go higher forever. It's $700 billion market cap. It will never, ever, ever get to a $10 trillion market cap unless you have institutional money coming in, which is Bitcoin going to 500,000, which is a forecast a lot of these people believe why they're holding it forever. If you really think, if you're holding Bitcoin to go to 500,000, you should love what happened. Not love it, because we know the government likes to fuck things up, when they get involved in business. But there has to be a framework where people feel their money is safe, just like it is at a brokerage firm. Just like if you're at E-Trading, you're buying all kinds of stocks, you feel fine. You're okay with that. It's not like, oh my God, the government's regulating or they're sending me, taxes and capital gains or what I made. That's what you need in this industry across the board, because it's going to weed out all the bullshit. So if you're looking to hold an asset forever and Bitcoin forever, and you don't want any government, or if you really don't believe in that, right? If you're like, well, I think this is bad news with the government, you should be selling some of your Bitcoin. You really should. Because holding an asset forever that has a ceiling is absolutely foolish. And it has a ceiling. It won't go any higher unless you have money coming in. And we're not talking about, because you need an asset that's 100% scalable, has unlimited potential to grow. This doesn't have unlimited potential to grow. Okay, it's not unlimited potential if it's limited mostly to retail investors and what? El Salvador and a couple of governments? Really? That's going to push it to 500,000? There's 250 trillion in global assets under management. Every one of those banks that are managed at investment firms, all of them across the board, I'm talking close to 100%, their clients want to get into alternative assets and Bitcoin. They're asking to get in. They want to get in. And when it comes to Wall Street, they're going to give what the people want, whether they get killed or not. And that's even Jamie Dimon. He doesn't believe in all this and whatever. And then all of a sudden you saw him say, well, now they have their own, get into blockchain, digital currency. They have to get in it because their clients want it. If not, they're going to leave that bank and go someplace else. So in order for them to get in, they need a framework. They needed the president to come out and say something like this. I know they didn't really announce anything, but the fact that they came out and acknowledged it is huge, because now the institutions have a framework. We could start building this as we see the SEC get involved or whatever. Again, am I nervous about them getting involved? Of course. But I also know that in order for every investor to get in here, especially institutions at $250 trillion, you need framework here. And it's just to check the box, Daniel. It's just a check the box, because I can tell you, you want another check the box opportunity, disclaimers on commercials or on anything. I mean, they have them up there for a second in its lowest print. You can't even freaking see them, right? You can't see, they're useless, but you have to have it on there for healthcare. And I'm not talking about causes diarrhea. If you read that stuff, it causes depression, makes you have suicidal thoughts, causes gambling addiction. Have you seen that? That's on there. That's on these lists. And you know what? They check every box this way, no matter what anything happens to everybody, they're fine. And again, is it useless? Yeah. Is it going to result in people not taking something? Probably not. And it's in a disclaimer that has print that, again, I just started wearing glasses. Even if I wore the greatest glasses in the world and binoculars, I wouldn't be able to freaking read that. And it's up literally for 5 seconds. And it's like, 300 words. And not even 5 seconds, like 3 seconds at the end of a commercial. So it's important that they came out with this, because now it's going to open the door for institutions to come in. I hear the argument that, okay, it's a government and they're just announcing shit or whatever, but the fact that they announce it allows these institutions to go forward with their plans. And when you're looking at 250 trillion, if you are a Bitcoin bull and a lot of those people want to hold it forever, I understand decentralization. If you want it to go to 500,000, it's not going to go to 500,000. I know there's a limited supply. You still need people to buy it 40,000, 50,000, 80,000, 100,000. To go to 500,000 or higher, you need trillions to come into this market. That's institutions. And that's how you're going to do it. That's why this is a game changer. And now you have a market where a lot of these things have gotten nailed. It's providing great opportunities. I've said this before in this market, Daniel, and you'll probably agree with this. I've never seen a market where you could generate more returns. Is it risky? Yes. But I'm talking about 100,000% gains, 50,000% gains. And I'm not cherry picking like a Netflix if you bought it a long time ago, or Microsoft, Apple 15, 20 years ago. This happened in the last 3 years. You could pick hundreds of tokens. Now you have the new generation of innovation, which is what? Which is decentralized finance. Again, that's a trend that's probably old to most people in crypto, but still massive scalable opportunities impacting all businesses. You have security tokens, which we're in with our security token. You have NFTs, which is huge. Massive NFTs. And it's not just, kids selling bananas and monkeys. Forget it. It's ownership of your assets where you can get royalties, where you don't have to worry about sitting, all of our content being on all these platforms, where they could pull it whenever they want, right? Whether it's Google, Apple, iTunes, or whatever, right? So now you have control. And you have the metaverse, which is incredible. And the amount of money, all the major technology companies, every single one of them, all the FANG names are all building out their platforms in the metaverse. So all this can take place and build, and this innovation, this is innovation. EV is not innovation. That was developed a long time ago. So is AI. So is, virtual reality. These are all extensions, right? With crypto, this is innovation. This is new shit taking place on the blockchain. Now you need to let this loose. And the fact that you say you want to make the U.S. competitive, and you have Russia not in crypto, you have China announcing, hey, no crypto. It gives us it's going to create a breeding ground for the smartest people who want to come here, because that's how you're going to disrupt the whole entire world and every single industry. This opens the door. Am I looking like at this as no? Could there be risks to this? Yes, we know it's the government. They may overstep, but you do need that in place in order for the institutional money to come in, and that's a big deal if you are long crypto. That was a long explanation, wasn't it? That was a little bit too long.
Yeah. It's good.
That was a little too
I knew you were fired up about that. I enjoyed that. We had a good conversation to start, yeah.
The people in they educated me tremendously. And I understand. This is why it was created, Bitcoin. It's Toshi. No government. There's a reason why it was created right in 2008, right, with the credit crisis. And I understand. But if you're holding it and saying, I'm holding it on forever, you need institutional money to come into this thing in order to push it to a $10 trillion valuation from a $700 billion valuation. That's not going to happen without institutional money. It's not going to happen from El Salvador. It's not going to happen from retail investors. That's what you need. And now it's opening up the door for that. That's what we want. But there's lots of risk, and I get it. The government usually messes everything up that they get involved in. But it will be nice to have a framework and weed out all the garbage, because we have a real project, great cap table, doing the right thing, related to our business, direct equity stake with our token, and you could buy that on T0. Could we fail? Yes, it's a company. We could fail. Nobody buys newsletters anymore, but there's people out there that are collecting money with these projects and just spending it on new cars, not using it to build the projects. There's a lot of garbage out there still that you have to weed out, and that's going to create even more innovation and really push this industry to the next level. That's what you need. Just like we needed with the internet and regulation and different things. It's happened during all these massive transformational technologies, and you can look at it down the board. For me, I think this is a great deal. Now, we are running a little bit late. I know you're interested in one more topic really quick, guys, is AMC. Okay, Daniel, starting to get fired up that, but I'll leave with AMC, because AMC had some news out there, and it was very interesting. We're getting a lot of emails. We wanted to get to it really quick. Go ahead.
We can talk about this more. I just want to pose the question. So AMC, the theater, bought a 22% stake in Hycroft, which is a mining company in northern Nevada, gold and silver. And they got, 20 some $million. They did a big investment, millions of warrants and things like that. Obviously the low hanging fruit is, hey, AMC theaters, movies, investing in a mining company. Eric Sprott from Sprott Management, or I don't know if that's the actual name, but Eric Sprott, the very successful, very well-respected resource investor. And CNBC leads it off with movie theater chain AMC just bought a stake in a tiny gold miner with a shaky financial history.
I mean, what is that? So if you're not familiar with the junior mining market, shaky financial history, I mean, they don't generate revenue, right? They put a stake in the ground, they start, drilling, and hopefully they find a nice project that they could sell to somebody else, right? That's what a junior miner does. And they don't develop the project. It takes 10, 12 years. It takes hundreds of millions of dollars on the low end, to build the infrastructure, the lighting, the water, the facilities, forget it. So, in terms of financials, it's usually they have a cash balance and they're just using it to drill and, pay a few employees. So I don't know what the financial thing is, but I think it was Hycroft Mining that they took over, right?
Yep. Well, 20 some percent stake.
I'm sorry. Yeah. And they got warrants and stuff like that. And then the same number of shares on warrants in Hycroft is being purchased by, like you said, Eric Sprott, who's, I know he's been on this podcast. I've hung out with him and in his office with Rick Rule, who reached out, and I got to reach out because I'd love to get Rick on the podcast again, who's really getting bullish on uranium now. Extremely bullish. So, and he's been bullish for a while, but, anyway, I want to get him on and get his thoughts. He's doing a lot of stuff within the uranium market, but they're basically investing in something totally outside their business. Now, if you're looking at AMC, I want to throw some numbers at you. I'm going to try to be as quick as possible. Valuation last year surged to $23 billion, even though they posted a $1.2 billion loss. They're not expected to generate positive earnings. Pick the year, probably after 2027 at least. So in 2019, and this is, pre-COVID, pre-craziness, pre-Wall Street bets, it generated $5.4 billion in sales, right? That was their peak. Global box office sales total global was 11.3 billion. Those are the numbers. That's 2019. The best you got was 5.4 billion in sales. Your market cap went to 6.5 billion, right? That's the perfect conditions. That's at max. I think global sales were probably a little bit more than that the year before, but that's almost peak, right? Today, the company's doing less than half in those sales, 2.5 billion. Their market cap is 9 billion today. Today, after the stock is down 80% from its highs, it's still $9 billion. And they're doing 2.5 billion in sales. And you're looking at global box office receipts are down considerably. And they're going to go higher. I think it's like 4 billion, and maybe they get to 11 billion in 2 years, 3 years, 4 years. My point is, if we get back to record box office receipts again, just say the $11 billion, AMC stock is still significantly overvalued. So in order for them to keep this market cap long term, what they need to do, they need to do other things. So is it gold? I don't know. I mean, is it NFTs? I don't know. I mean, you saw Microsoft, Google, Amazon go into cloud, but cloud fit into their, ecosystems, which is fine. And I get it. But AMC is sitting there with a whole massive group of investors. They're sitting there with a lot of cash, and now they're looking to invest in different things. Investing in gold, it's kind of weird, but I applaud them because they need to do something. They can't go all in on theaters because even at the max, the greatest times ever in history in 2019, which we're not even close to being there again yet in a couple of years, their market cap peaked at $6.5 billion. They're $9 billion right now, and that's with the stock down so much. Now, you could manipulate this, and Wall Street Bets could come out and push this wherever it is. I'm just saying, if you're looking at those numbers, the CEO knows we need to do something else. We need to find other forms of revenue. It's just like what we do with our business. Like, what's the next step? Yes, we're publishers, but how, and now we're becoming a crypto company, and now we're seeing huge demand for our crypto newsletters. And, so how are we building that out? How are we going to partner? Or do we want to do something with the metaverse? We're always looking for different areas of how we could branch out and grow our company. I applaud them for doing this, as crazy as in gold, but if you're going to do it with the best guy and the smartest man probably in the whole entire world when it comes to resources, which is Eric Sprott. I mean, that puts a lot of credibility to it. And, it pushed the stock up already. I'm sure the warrants are already in the money with these guys, but let's see, because I'm sure Eric said this is one of the main projects we love the most. They're invested across the board in so many different things, but just be careful buying AMC or buying that stock, because when they give away that many warrants, usually they're going to short the stock right away, capture that balance. And it's more like an arbitrage opportunity. This way, there's a no risk for them. So you may see that mining company go higher initially, but you're going to see the short interest go up tremendously from a lot of those big names that are in there, something that, you're not going to read in textbooks and things like that, but things that I know from experience in the industry. So I would be careful. But I applaud them, Daniel. I really do. I think it's pretty cool.
I don't mind the move. It does make you scratch your head, but listen, if you're surprised about anything with the AMC and the meme stocks in general, I just don't think you're paying attention. I think this is entertaining as hell. The CEO points out in a press release that says, hey, we're not just going back to the old AMC. In 2021, our retail shareholders armed us with $1.8 billion war chest to play on offense and grow our company.
Amazing.
That's a better way of saying we diluted the hell out of everything, raised a ton of money, and just to survive. But hey, that's what they did. This is what's great. One of your biggest roles, as Warren Buffett always talks about as a CEO and a manager, is asset allocation, money allocation. I have egg on my face. I've been bullish on gold and silver for several years. It's not gone near as high or anything as I thought. But yeah, this shouldn't surprise anybody that AMC is doing this, in my opinion, and I just think it's entertaining as hell.
No,
I would like to hear, though, if you own AMC, email us, Daniel@CurzioResearch.com, Frank at Curzio Research. I'd like to know, do you like this? Does it make you want to buy more, sell more, or sell some? Anyway, just give us some feedback. I'd be interested to hear on the average shareholder out there in the movie theater.
And $1.2 billion in cash is a great thing if you're a company, because now they're not to build a few more theaters and stuff like that, maybe 100 theaters, whatever they build. But again, they're not going to get to that level. They need to do something else. And at least there's a lot of companies out there that don't have that cash on a balance sheet. They do. So at least they're thinking outside the box. Again, I don't know if it's positive, negative. I'm not a shareholder, but they need to do something. And maybe this is it, because gold is super depressed. And I don't know why it's not at $3,000 or $4,000 right now. I have a lot of gold investments, and investing alongside Eric Sprott is never really a bad idea. So maybe this works out for them, and we'll see. Kind of like how MicroStrategy invested in Bitcoin, same thing. I mean, we'll see the value of that assets and see what else they're going to do. But Daniel, okay, we always keep this to like 30 minutes, went to 40 minutes, because it really is the Fed. I mean, you've seen China stocks go through the roof. We wanted to talk about Biden's new executive order and stuff. A lot of stuff going around. So we want to be here for you and break down and always provide you ideas. So, Dan, thanks so much for coming in, buddy. Love having you on the podcast, and always getting that feedback. It's been fantastic. So
always enjoy it. Cheers.
All right, guys. So that's it for me. Questions, comments, feel me, email me, frank@CurzioResearch.com. We are going to open up our membership to Crypto Intelligence again with a very, very, very special deal, the best deal that we've offered since we've launched this product, I think 4 years ago. So if you got in November, it's pretty much the same offer. But right now, what I'm seeing in this market and some of these opportunities where we're able to buy them, it's pretty incredible. And, we are getting some questions about it. So, we are going to open that up probably in the next few days. I'll let you guys know, but we're really excited about crypto right now. And I do think that this is a game changer, and the opportunities in that space and where you can get in compared to buying a freaking SPAC or an IPO at 100 times sales is insane. This is the chance to get in a ground floor of a lot of good technologies. We have great contacts within this business. And one of those guys you're going to hear from tomorrow, who has 1 million followers, just about 1 million followers on Twitter. One of the most listened to guys on when it comes to crypto. Brilliant. And it's going to be great interviews. So definitely give a listen tomorrow, and I'll see you guys then. Take care.